It's Wednesday, May 21st, 2025. Breaking news. Tonight, Wall Street just took a faceplant off a fiscal cliff. Dow down 800 points. S&P and Nasdaq sliding like it's 2008 karaoke night at Lehman Brothers. The culprit? Treasury yields, surging like a caffeine-jacked hawk. The 10-year yield hit 4.59%. The 30-year breached 5%, and suddenly everyone remembered Uncle Sam is broke and still shopping like he owns a money printer. And just when you thought the fiat circus couldn't get any glitchier, Bitcoin cracked a new record above $109,000 before dipping. Because even digital gold gets nervous watching a fiat bonfire. As Trump's tax and spend bill creeps toward a House vote, Republicans are trying to duct tape their splintered caucus together while the bond market throws a tantrum. Turns out, markets don't like magic math and trillion-dollar deficits. Who knew? I'm Max Boltz, and this is Crypto Wars, where fiat flops and Bitcoin flexes. And while DC fiddles with fire, Texas is out here stacking sats like it's 1836. Texas just gave Bitcoin a 10-gallon hat and a seat at the Treasury table. The State House passed SB 21, clearing the way to create a state-run Bitcoin reserve. That's right, Texas is putting BTC on the government books like it's oil or cattle futures. The bill now heads to Governor Greg Abbott's desk, and given his past love letters to crypto miners, his signature feels like a formality wrapped in a yeehaw. Under this law, Texas can only hold cryptocurrencies with a 12-month market cap over $500 billion, which basically means Bitcoin and no one else. If this passes, Texas becomes the third state to launch its own crypto reserve, following Arizona and New Hampshire. But it's not all smooth sailing on the blockchain prairie. A sneaky little clause allowing private crypto donations was quietly slid back into the bill. Critics are already warning this could turn the state's reserve into a Trojan horse for special interests, or a front-row seat for regulatory capture in a cowboy hat. Still, with bipartisan backing and a digital gold rush vibe in the air, Texas might soon be hodling harder than your average Bitcoin maxi. But while Texas builds reserves, some Bitcoiners are building legacies. Just when you thought Bitcoin couldn't get any more grown up, it just got a trust fund. Unchained, the $10.4 billion Bitcoin financial services heavyweight, has launched Gannett Trust Company, the first Bitcoin-native, state-regulated trust company in the U.S. Chartered in Wyoming, of course, Gannett is built for families, founders, and fiduciaries who are done stashing seed phrases in sock drawers and want estate-level inheritance planning for their sats. Nearly 3.7 million Bitcoin are believed to be lost forever due to poor planning, and Gannett wants to stop that bleeding. The trust offers custodial and non-custodial options with an emphasis on security and sovereignty, aiming to make Bitcoin a multi-generational asset. CEO Joe Kelly says this is the infrastructure Bitcoiners have been waiting for. Legacy wealth, meet laser eyes. Speaking of protecting the builders, Congress might actually be doing something right. Tom Emmer just reloaded his crypto six-shooter, and this time he's aiming to protect the builders, not the bag holders. The Blockchain Regulatory Certainty Act is back on Capitol Hill, with bipartisan backing from Emmer and Richie Torres. The bill would shield non-custodial crypto developers from being labeled as money transmitters under outdated financial laws. If you don't touch customer funds, you're not running a bank. It's that simple. The bill's supporters argue this legal clarity is crucial to keep innovation in the U.S. and prevent a mass exodus of talent. Crypto policy groups are cheering it on, calling it a blueprint for safe innovation without sacrificing oversight. Now the only question is, can Congress pass something sane before every dev books a one-way ticket to Portugal? And finally, the Safemoon rocket didn't just fail to launch, it exploded mid-lie, and the CEOs headed straight to federal orbit. John Caroni, Safemoon CEO, was found guilty on 3 major crypto fraud charges and now faces up to 45 years in prison. A federal jury ruled that Caroni and his crew lied about the project's decentralized liquidity pool while secretly dipping into it to buy luxury real estate. At its peak, Safemoon's market cap hit $8 billion. Now it's the subject of a fraud case, asset forfeiture, and a lesson in what happens when hype meets handcuffs. The DOJ sent a clear message. If you're going to rug pull the public, don't leave a paper trail or real estate deeds. I'm Max Boltz, and this is Crypto Wars. Your support is our gunpowder, so reload us with a sub and spread the word like we're marching on the digital front lines. Good night, stay sovereign, and stay spicy.